Welcome back to the Property Frontline. Today I'm here again with Scott Hochgesang. Hi, Scott.
Hello, everyone.
For our Market Watch session, where we'll be covering off market performance in the Australian property market for results to 30th of April 2025. So we will be, as usual, reviewing the data from the three main data sources that we rely on. So CoreLogic, PropTrack, and also SQM Research. And in every episode, we also cover a very special topic. And today we're covering off the topic of apartments. So let's get going. So as I mentioned, we draw our data from three sources: CoreLogic, SQM Research, and PropTrack. And so, Scott, would you like to cover off performance for the first four areas?
Sure, Deborah. I'll take that as a handover. These are house price stats for the month of April. Starting with Sydney, we've got CoreLogic, 0.4% growth for fabulous Sydney. PropTrack slightly lower at 0.2%. And then our friends at SQM with their asking price data, which we tend to find is a bit more predictive maybe of what is coming. Quite a large 1.8% increase in ask prices for houses in Sydney. So
Yeah,
we've got a few aggressive sellers maybe
yeah,
anticipating those rate cuts to come.
feeling more confident. Or either that or the agents are.
They may be. Yeah, we'll see what the properties sell for. Rolling down to Melbourne, actually a slower increase in Melbourne here, 0.1%. And interestingly, I had to look at the quarterly data for Melbourne. It's at 1% for the quarter, so that month is down versus the last 2 months. So we're not on an upward swing there. Maybe that big Melbourne turnaround is not totally here yet, but is well talked about. PropTrack 0.2%, and then SQM also quite a high increase in their asking price figure, 0.7%. You know, and they do say Melbourne and Sydney are the markets that are most attuned toward rates and rates. So maybe in both markets, starting to anticipate what many are saying is to come. Brisbane solid 0.4% from CoreLogic. PropTrack lower at 0.2% growth. SQM up 0.8%. And rolling down to the city of churches, Adelaide, 0.2% growth from CoreLogic. About the same with PropTrack, 0.3. And then we've got a fall in this SQM data that I actually had sent to a few people. We'll see if that continues in the following months or not. Is something happening in Adelaide, or not? We'll have to wait and see. So rolling over to Deborah to take us through a few cities.
Okay, so Perth up by 0.4%. PropTrack says Perth is up just 0.1%. Like, is that even like a movement? Asking prices up 0.4%. Hobart, interestingly, CoreLogic performance is saying an increase of 1.1. I mean, Hobart has been like dead as a doornail for quite some time. So probably, a sale of a few extra houses there has pushed that up. PropTrack, 0.2%. And then SQM asking prices, I'm not surprised to see this, of 1.3%. I wonder if everyone's feeling more confident or more bullish now that we're past that Easter, Anzac Day, and the election. So everyone's kind of a little bit more confident.
Or anticipating it. Remember, that was April, so they were anticipating that was to happen, and maybe they're pricing high, expecting, that's the case.
Okay. And so then to Darwin, an increase of 1%. PropTrack has no change. SQM up 1.4. Canberra up 0.4. PropTrack up 0.2, and SQM asking prices down 0.8. So that must have been that week when Peter Dutton said, okay, everyone's going to go back to work.
40,000 in job cuts. Yeah, exactly.
Yeah, national. Really, let's not really talk about that. That's really not all that relevant. Now, we have included this great graphic from CoreLogic, and we'll explain it a little bit. So where you see red, that's prices going down, contracting, and where you see blue, the bluer of blues, is where there's been price strengthening. And so the message here at a higher level is that, so this is Sydney, and CoreLogic is saying where prices have increased in the outer areas and where there's been price decrease or softening has been in towards the city, Melbourne. I hate to say I told you so, like I told you so. Anyway, maybe the correction's coming.
Yeah, I'd say a lot of red in Melbourne for the year,
Mm-hmm.
but you can see that southeastern blue. So certainly the better parts of the city did see
Yeah,
some growth in the last 12 months.
yeah. That is the choice, isn't it? And your Geelongs and all of that kind of thing. Yep.
Geelong and Werribee.
Yep. Okay. And yeah, so I'll take Brisbane. So Brisbane, some tiny little pockets, but really, yeah, you can really see where there's a lot of growth and a lot of activity as Brisbane it'll start to fill out around here because Brisbane expands along the coastline. Yeah. Anyway, good performance there. Do you want to take the last two?
Sure, we've got Adelaide, pretty well similar story, higher growth down south, sort of far away from the city, and in that upper north corridor.
Mm.
A lot of new developments up there, actually. We are seeing developers advertising land and so forward up there as people are priced out of the city. And then over to Perth, it's kind of a similar story. It's the higher price stuff is way up to the north, inland to the northeast, and way down south around Mandurah. The rest of the city has grown because it's
Yeah.
like blue.
And
It's
then,
really that's what was powerful about this slide, I thought, was that it really shows last 12 months capital cities, most of the growth has been in those outer corridors, cheaper areas, more affordable houses, often less desirable places to live, but it's what people can afford to buy a house in. So
yeah.
just the reality of these markets where prices have gone up so much in the
Mm.
capital city, the inner city areas.
Yeah. Okay. Alrighty. So what's next? Oh yeah. So we'd all like to congratulate the Federal Labor Party for their amazing result a couple of weeks ago. Because, I better not say anything else about some of the other parties, but what are we looking at over the next 3 years as Labor rolls out their policies? So their commitments, they have committed to building 100,000 new homes over 8 years. That will be just for first-time buyers. And people I won't spend too much time on this, but, everyone sort of goes, 100,000. Like we have about 100,000 first-time buyers. Actually, I think it's like about 140 first-time buyers every year, 140,000. So it is a drop in the ocean, but it's a start. Like, geez, give them credit for that. The scary one, though, is the expanded 5% deposit where the government will cover between, what is it, up to 20% of the deposit. And so that means that first-time buyers won't have to pay lender's mortgage insurance, but there's now no income caps, no participation limit. So it used to be limited to the first 10,000 who would make it through. There's no participation limit, but there is, and they have increased the price caps or just caps to show you that. So they've increased the budget levels for everybody. And this is what's really set the share market commentators off, is like who's going to so it means that first time buyers can buy a $1.5 million property with just 5%. And Anyway,
That's a huge mortgage, for them to
yeah,
have. And also the banks do need to give them that loan, which means they would have to be on extremely high incomes,
mm,
to get that. But I think we do all acknowledge there could be some risky lending there that does need to be watched.
yeah,
And we don't want to end up in a bad situation where the banks have done loans where people cannot make their payments.
yeah, exactly. All right. And then the government is rolling out its Help to Buy scheme where it will be part owner of the property. And initially, from the broking industry, people were like, oh, that's a bad idea. But really, if you're staring down the gun barrel of renting for the rest of your life, this is a great opportunity for you to have your own home and, have that all of the peace and safety of living in your own property.
Yeah.
This was a surprise for me when we were running through the list of what Labor actually promised. So they're providing a 45% increase in rent relief for over 1 million renters. So that's a jump of 45% from one year to the other. And I know they've costed this out. Gee, that's a lot. I know it's needed, but wow.
Yeah, it's a lot of rent subsidies, and they do need to be careful that doesn't just feed into higher rents,
Yeah.
subsidizing it.
And of course, we all know that the way to get control over all of the price hikes, particularly rent increases, is supply. And they are working on that. They have plans and money set aside for 50,000 affordable homes. I think this is over 5 years or something, but they have already got 28,000. Money set aside for 1.2 billion for crisis accommodation. Yeah, excellent. They have recognised and listened to the construction industry, so they have set aside money for apprentices, so to get more trainees into the industry. Goodness knows we need more than 6,000, but anyway, to start. They have this foreign investor ban that was introduced a couple of years ago, but that remains in place until the 1st of March 2027. So this is where foreign investors, like there are other things that foreign investors have to face, but they cannot purchase existing property. They can buy new property, but there's a lot of tax involved. Let's not go there. And then this last one, they have committed to putting 1.5 billion working with state and local governments on enabling infrastructure. So when a new suburb is built, there are some acquisition costs, but what the bigger cost is in like clearing the land by trees and koalas, putting in the stormwater and the piping and the Telstra cables and all of that kind of thing so that the builders can build. All of that is often done by local government, but not local, I mean the state government. Anyway, so federal is giving money to them. Anything else you think I need to cover?
Just a solid list, and just remember, everyone, this has all got to get through Parliament. Most of it does, and that means it still does need to pass the Senate too. So Labor will need to do a deal with someone, the Greens or the Libs, to get these policies in place.
Yeah, good point. Okay, so on to our special topic. So I will do most of the talking and Scott will put in his 50 cents worth every single time. But so to set the scene, we wanted to cover off apartments because we are normally really just focused on commenting on houses. And to clarify, in my world, when I mean apartments, I mean units, not townhouses or duplexes, because in my world, I put them into the houses category. But Scott,
Yeah,
you've got
just
any?
a point on our data sources. We do need to be knowledgeable of that. But the data sources lump together all strata together. So that means strata units and strata townhouses are all in our units data. And the houses data does, as Deborah's highlighted here, include things like duplexes and terrace houses on Torrance title. It seems to be that title classification is the way the data's cut.
Yeah.
I certainly agree with your concept of cutting it that way. There are units and things that feel a lot more like houses.
Yeah. Okay. Alrighty. So, Scott, do you want to cover off this one to get us started?
Sure. So this has been out in the media quite a bit. A lot of analysis going on of house prices versus unit prices. Pulled some numbers here from CoreLogic. These are median prices for capital cities. Just showing the increase in houses versus units. This is that median house being sold across the country in capital cities. You can see that gap has widened dramatically. A lot of that has, I would say, in Sydney would be probably the market where most of that has occurred, but there has been some widening of that gap in a few other capital cities as well. And on the right, it just shows you what that gap is. So, upwards of 40% or more across all the capital cities.
Yeah. And what were we saying in our prep about this?
Yeah, I just wanted to say, I guess I would want to be careful that no one walks away with a conclusion that says, wow, units are cheap, because they should be up closer to the price of houses. And just want to kind of highlight units and houses are quite different. They have different numbers of bedrooms, studios, 1 bedroom, 2 bedroom units mostly. Houses are 3, 4, 5 bedrooms, so they hold larger families.
And so it pulls the price apart, doesn't it?
Yeah, a little bit. And certainly we've seen that scarcity of land, which houses have, and units would share their block of land with all the other residents in our cities. That has been a big driver of value.
Yeah. Yeah. So it is a very important point to make that we're not really comparing a similar size and price point. Okay, right. And so just to further emphasize that, so when we look at the prices from, once again, a median level, but this is asking prices. So, yeah, looking at this one, it says Sydney house prices, the median, according to SQM, is around about 2 million, where they say units are a bit less than 50% generally. And in Melbourne, around about 50% difference. In Brisbane, probably about 60%. And that is because Brisbane is a kind of a younger city, so there wasn't as many units built. So there's a lot more new stock and larger stock. So the price point is a little bit closer together to houses. Perth, almost a similar story to Brisbane, but yeah, so still a good gap there. And then Adelaide, around about 50%, and Canberra, just on the 50% differential. Then when it comes to rental returns, and so, the old myth is that the rental returns for a unit will usually be better, or you'll have a better chance of being cash flow positive with your rents in units. But we're not, is that necessarily true that we're seeing this? Once again, it is median data. And so this is a CoreLogic table, but they're saying average rents in Sydney around about 816, all the way down to like Darwin and Canberra, 690, 720 per week, whereas units in Sydney. So, if you looked at it this way, you could make the assumption, well, if I'm paying 50% less for my unit, I'm getting almost a very similar rental return. So it's tricky, isn't it, when you sort of look at things at this high level. And that's where, people get really lost in the mist when they really just look at high level data. It's just a real mess. But yeah, so even like yield, so current yields, if you look at the yield line, 2% around to 6%, and then current yield, sorry for my big slide here, but your current yield, so 4%, almost double the yield averages. But anyway, when we look further into the numbers, do you want to take this, Scott? Have you got a point to make about this?
Well, this shows across, it looks like capital cities and regionals. We've got yields for houses and units. I mean, it shows that the yields are higher. The gross yields are higher for units.
Yeah.
But again, I guess you've got to do that deep drill into the specific property and look at all of its costs. Strata is obviously a major cost that units have that houses do not. It does typically cover some of the insurance for the building, so that needs to be thought about as well. So I guess at the end of the day, if the myth is that they have higher yields, they probably do. Do they have higher cash flow, though? I think that's going to be a case-by-case situation that involves really detailed study.
Yeah. Okay. This one's for you as well. So on to what to buy.
So, yeah, we're going to talk about what to buy and what not to buy. So let's start with the no-go zones. We don't want to be looking at new off-the-plan units in far-out suburbs, even in our capital cities, even to get into the market in Sydney. This is just an example of new off-the-plan one-bedroom units being sold way out, probably out toward Box Hill.
Yeah, and look at the size of it. 56.
56 square meters. So you get a small one bedroom. They're probably selling these on, you're getting the first home buyer grant for $10,000. So that reduces your cost. Maybe a small deposit in, but really at the end of the day, if you think about where this property is going to be in 3 to 5 years, it's a very good possibility you're not going to see any growth at all. And one of the reasons is that foreign investors still can buy these new properties, and they do buy a lot of units. So you've always got to remember that you're buying with the foreign investors, but then you own the unit. So when you go to sell your unit in 3, 4, or 5 years, it's a used unit, and you put that on the market and you sell it. None of those foreign investors can buy your unit. You're selling to local buyers only. So it's certainly something that can hurt values. I'm sure you've got some thoughts as well, Deborah.
Yes, but I'd rather demonstrate. Yeah, a couple of points about that, though. Remember that in all of the states and territories, but particularly in Sydney and Melbourne, they have recently rezoned all around the transport areas, so usually around the train stations. So there's going to be more apartment supply closer in. So you'll be able to do better than that closer in. Just watch and wait. So what to buy? So the choice is, there's a large range of choice. So there's off the plan, which we would only recommend in very rare occasions where there's a real reason, it's like a never to be offered again opportunity of a great location, unobstructed view, right on the beach, whatever. So it has to be very rare.
Very unique.
Then there's new, so I would class that as it's already in existence. You can walk through it, but no one else has owned it yet. Then there's the existing 1 to 10 years market, and then existing 10 years plus. We also have high rise, mid rise, and low rise. And then you've got your capital city markets, suburbs, and regional. So really the case for buying apartments is to target something like this. So your low rise, older style property with a lot more land And typically, not in every case, but in a lot of cases, these areas or these blocks have been rezoned. There was one story that I love to tell about how we were looking at a unit. It was actually already 10 levels. We were looking at it for a client of ours, and it had been rezoned to be 50 levels high. So that's one of those examples where you can combine together with the other owners, get a developer involved. Everyone has to walk out, the place is knocked down, rebuilt, and you can turn one unit into a few. So it is a strategy that a lot of people are starting to pick up on. Yeah, so lots of opportunity there. Then your mid-rise. So we are starting to see this market start to really move with the boomers because, it's a real lifestyle choice where if you want to stay closer into the city, you might have lots of shops, coffee shops and dinner, like pizza shops downstairs or bars. If you're someone who travels a lot for work or you're semi-retired, you might want to lock up and leave and go overseas. You can do the property swaps. And often they have great views. I can't say enough about it. Just check on Strata. And you can see up here, this is a real trend that we're starting to see. Gone are the penthouses, but the shared view deck is becoming a real feature. And then we have the high rise. So under what circumstances would you buy a high rise? Like we made a joke about watching Towering Inferno once too many times to be interested, but
I'd say maybe somebody moving to the Gold Coast that wanted incredible views of the ocean. That would maybe be a buyer, wealthy individual buying in the city of Sydney and wanting a unit near the casino at Barangaroo, but we're talking millions of dollars on these units. Nothing really for, a typical investor.
Yeah. Or home buyer. Yeah.
Or home buyer. Yeah. There's a lot of tall high rises like that out at Rhodes, by the way. And
they're not that tall, are they?
They're
Oh yeah, comparable like Opal towers.
Yeah, 30 stories or so, and just a massive supply of those towers and units has really kept growth from
occurring
there in the last 10 years.
Yeah, but still well located. All right. I think that really does it for that one. Yeah. So as we were saying earlier, is it really fair to compare units with houses? I mean, for a number of reasons, no. But when you're thinking about what to buy, we would strongly recommend that you try to avoid the one bedroom, one bathroom kind of unit. I really see that as being useful for someone who's got like professional, who's got, their house somewhere in the country and they just want a place like a bolt hole in the city, which is what they do a lot in London, right? Yeah. So the like their one bedroom apartment in the city and then they, go home for the weekend. But yeah, I don't remember. Like why were developers doing a lot of one bedroom units? Was it for the foreign investors, student market?
Investors and just price point, just people being willing to live in it's kind of pre-COVID too, if you think about it.
Yeah,
we now have this massive work from home trend where a single person or a couple just want to have that second bedroom to have their office in there. I also think that, if you own one of these and you're renting it out, I always want to be able to rent to two people.
Yeah.
I'm just going to get a much higher rental yield on that property versus being solely reliant on a one bedroom unit.
Yeah. Yeah. And I know that some first time buyers, they really just want to be in Sydney in the thick of it. And so they will strongly consider the one bedroom, one bathroom properties, but they usually have to be really well located and have something extra like a really lovely balcony or something like that that's really going to make it worthwhile. But otherwise, yeah, we say really go for the 2-bedroom or more. But yeah, you can see the difference. It will cost a little bit more when you're looking at units because there's fewer of them, fewer 3-bedroom units, and very, very rarely will you find 4-bedroom units. So once again, it's a supply issue and the developers will need to do something about that. Okay, alrighty. So what to buy? So we've talked about how outrageous all the prices are. Look at this. So this is just, doing a little bit of prep for Market Watch. And this is a unit that sold a couple of days ago. Parramatta, 2 bedrooms, 2 bathrooms for $460,000. Is in what I call a moderate high rise. The strata was around about 1.6, I think, a quarter. But when you think, well, that includes your building insurance. And we didn't buy this, so did I see the strata inspection report? No, I didn't. But it's hard to understand how people can say, oh, I can't really afford to buy in these areas when you can find things like this.
And you're probably paying to rent that $600 a week now out in Parramatta. So
yeah,
it starts pushing the boundary where it literally costs no more to own your property than rent.
Yeah.
And that typically does make it an easier decision for people.
Yeah.
For not to move and have the growth of owning the property versus paying somebody else's mortgage.
Exactly. Okay. All right. So pros versus cons. So the pros in buying a unit, like on the range of costs that you'd have to consider, the number one pro would be there's no land tax, so minimal land in a unit. So usually zero land tax. There is an increased propensity for better rental returns. Once again, do your research. Choose the ones that are cash flow positive, or choose the ones that are good for you if you're buying a home. Usually much better amenities, usually closer to transport, shops, schools, medical locations, and also some of them will have those excellent amenities. So, the beautiful views that you can have from the shared party deck. Cons, of course, strata is the biggest con. It's a cost, but as we've been saying all the way through it, usually building insurance will be included. Always check construction issues. So we have been through a very long period where there was poor construction starting from the early 2000s, and we're still working our way through that. But the more recent builds you'll find, like, of course you have to check them out, but they're usually much better. And of course, anything built really pre-2000, a little bit older, will typically be built a little bit more solidly. And then the last one that isn't my favorite is strata will control what you can and can't do with your property. So, if you want to paint your front door fluorescent pink, they might have something to say about that. Okay. And so tips, just wrapping up. So, of course, with anything you buy in property, watch out for misleading data. We see this a lot more in units. So the purchase or the value of the property, so the price will often be inflated, I want to say, actually, just put it out there. So use very trusted sources and do your comparison checks. And of course, if it says rental guarantee, that's an opportunity to flee, is what I say. Of course, depends on the circumstance, but if you need a rental guarantee to buy a property, it's highly likely that it's not market rent. So anyway, just saying, always conduct a strata inspection before you purchase. Understand the strata rules before you buy. So what can and can't you do with the property? If you were thinking about having a property where you might want to Airbnb it for a certain amount of time, there's restrictions on that. Of course, the second last point, ideally conduct a building and pest inspection for your units. We always do it, but a lot of people think, oh, the strata inspection would cover it, but it doesn't always. And yeah, a real tip is check the balance between how many owners live in the property versus how many renters, because, well, you have to make a decision about which way you prefer depending on what you're using the unit for. But yeah, always good to know that. Anything else, Scott?
I'll just add maybe a tip when you buy in these low-rise units. Get involved and get on the strata committee so you know what is happening. I did own a block once in a small block of 6, and I was on that strata committee every year.
Was that the Bondi?
Watching what costs were spent, and just the stuff that you see happening is shocking. So if you buy into these projects and you're not involved, don't get all upset when the outcome is not what you're expecting from a cost perspective. You're going to have to commit a bit of time. Sometimes do a little bit of that extra work, get involved. Yeah,
that's a very good tip. Yeah. Okay, alrighty. So when it comes to deciding what to buy, of course, don't forget about the Buyer Success Program. So this is a do-it-yourself interactive toolkit that buyers can use to make sure they get the best outcome and increase their buying power. You can find that at the Property Frontline. So next time, we will be covering the high cash flow multi-tenant properties market as well as market performance. Right, and so it's time for us to say goodbye. If you would like to know more about what Scott and I do, or you would like to be alerted to our next session, make sure you subscribe, and our contact details will be in the description box below. Anything else you'd like to add, Scott?
That's all from me. Tell us about an apartment you own, everyone, and why you bought it, and we'll have a bit of chat about it in the comments.
Yeah, that's right. Okay, all right. Thanks very much. See you next time.